All right, let's now look at some numbers and get a little bit more real than just theory. So, I want to talk about the business model. We're going to do some do some peer comparison. Um, Capital structure, going to check this. The capex require to scale up, and some analyst coverage and popular metrics. So let's check what Aduro is presenting us. They can do their own processing plan and licensing, but let's check their own processing plans. Yeah, this is numbers, this is all theory and assumption that comes from analyst reports, CEO, other research people numbers. So I didn't come up everything with me. Uh, First, um, these numbers are coming from Yazan. Uh, these are like, let's say a company just make waste and doesn't recycle. They still have to pay for it. So it's gonna be, they still have to pay with no recycling at the end. So this is the what it means. It means also that in Europe you pay more. It also means that they're gonna pay more and more over time because hey, you pollute, you need to pay for what you pollute if you don't recycle. So a company will need something to cover that, right? And if we check the paralysis plan, which is another uh, assumption from Yazan, is that because paralysis plan is not perfect, like we saw before in the other video of comparative landscape, is that it's going to be the feedstock is going to be more expensive already because it's already sorted. Also, you need transportation because the plastics, the plants is not very modular, cannot go in refineries. Because also they need more pre-treatment and also post-processing. So all of this add a cost, and that's why he estimates it's going to be over $1,000 to $2,000 just for the operational costs with the feedstocks. But so you need the products to be more than that because the problem everybody faces, yeah, you need to recycle with them to with, that makes that you also make money with it, and that's why all these numbers came out around $400. Of course, this is a super speculative and assumption, only based that if you compare with the price of pyrolysis and you take the operation cost of our Aduro, which we believe is going to be cheaper just because it's modular. You can put in the refinery, so you don't need a lot of transportation. You save money on sorting because it's low pretreatment. You save money of energy because you need lower temperature than pyrolysis. Um, Save money on soil chemicals because the catalyst can be reused and something super cheap and something simple. You save money on processing because you don't need much processing, and you save money on overall just because it's a higher yield. So this is all good stuff. That's why it drives the thesis of Arduro being cheaper to operate. And we can also say that the feedstock can be cheaper just because they do feedstock that nobody can, so they don't have any competition. This is, we don't know exactly, but this is another assumption. Next is the product price that they can make. Do you think if with the name recycle they can sell it with a higher price just because it says recycle like a brand? Well, this is according to Pure Cycle conference call. This is what they say, that they can sell the products higher just because it's the products is made from recycle process. So it looks like a perfect storm for Aduro to make a super good profit margin. Well, this is at least 50%, right? Everything can be higher. Next, let's check out the licensing. We know licensing is a super good business model. Aduro is looking for that capital light and 90% gross margin. This is an estimate, of course, but they can own. This is what another good route for them. So they can let other people have their own processing plant and make money with licensing. That's a super high gross margin. So for me, it looks like a super good business model. The only thing they need to do now is to execute on their on how to go to this roadmap. So let's just have a small comparison with the other company in the market. I made some number here you probably don't see, but I decided to compare Aduro with PureCycle because that's the one we have the biggest market cap, and this um, they have $2 or $3 billion at the time of this recording, and Aduro is like 350 million. So if we check right from the get-go, yes, PureCycle they have more money. They also have debt, so we need to account that for the enterprise value. And they have some revenue also. They have one commercial plant that is running, not at full capacity, but still we're running. They are more advanced than Arduro in the commercialization. Yes, uh, but they only can recycle. They focus on the polypropylene that is super clean. I think you already know like Arduro have the best technology right from the get-go. So they have the best technology and recycle. Also Arduro they have more vertical. Or recycle they don't have any other vertical. If it doesn't work, they fail, right? They don't have any margin of safety. And they don't own their IP. Arduro have they own their IP. So just overall, like the business case valuation for Arduro against Procycle, like for me, Aduro of course can be unlimited valuation, but let's start with just the first thing they can get is the proof cycle valuation. I think that's the first milestone we can go, and based on the execution and where they are in the market. Of course, not financial advice. So let's check at the capital structure now, because it doesn't matter if the share price is not gonna go up if they dilute a lot of money, right? So as per Penny Queen, she made um, survey just to check in their network how many people have, which I believe are all smart retail investor, and so we can assume that all these people plus the insider plus the institution, which are all investors that are gonna hold for long term. That's what's the case that she made. Their survey is about 20 million share of the flow that is probably highly, I mean, more chance to be closely held. So this gives Arduro 10 million share with the float. So this is very small for the company. So again, I have a lot of volatility on this. Next, of course, they need some money to make to write their plan, but we don't want their plan to be too capital intensive. So the good thing is they already have cash in the bank, which is right now around $20 million. Their cash out. Uh, this is the result of raising money at the good time, and the last offering that they did in June. Again, make your this is not financial advice, but based on my research, they have around 1 million per month they're burning now. So they have enough money to, I believe, to cover the demonstration plants, which what the last offering was about 12 million to cover the construction budget of the demonstration plant and some bond rates. So I believe with 1 million per month covering and 19 million in the bank, we can safely assume that we don't see any raise for the next at least 12 months. My key takeaway here is their cash. They have money in the bank now. They can fulfill their goal. Uh, it's not a question of money now; it's a question of execution. Uh, and let's have a quick look. Is the stock is popular? Everybody follow it? To be honest, this stock came out from one group of investor on YouTube, and now, just now, in September 2025, end of September, is getting more and more attention, and the watch list of retail is starting to grow. But this is still very small. Like I to have a stock to it around 1,500 followers. I think there's still a lot of room to grow for people to understand what it is. So that's why I'm making this video today to start your due diligence right away. And I believe we're still early. They already only have one analyst that give them price target with the $48, and this is based on they have the plastic market share of like 0.5% in 2035. So very conservative. They don't even check other vertical, and the royalty was based on $150, which is not a ton, not a lot. But if you give them if Aduro can make a good products, maybe the royalty can be higher, right? So this is still assumption, but this is very conservative. That's why $48 is not like a number in the air and just like that. So this is the coverage for financial and valuation. This is not financial advice. This is me showing you my due diligence so you can start yours more easily. Thank you.